everyone. I'm your host Ibrahim Sani, and welcome to another episode of RHB Money Chat. Joining us for this episode is Tan Jitun, the Chief Investment Officer of Asia Pacific Equities and RHB Asset Management in Singapore, who will be sharing with us some of his insights on ASEAN as well as Asian market outlook for 2022. Thanks for joining us, Jitun. Let's talk a little bit more about 2022. What are your views on Asian equity for this year?
Okay, thank you very much, Ibrahim. So in terms of our view for Asian equities for 2022, I think to answer that question, I think we need to maybe analyze and understand the performance of the Asian equity markets for this year, 2021. So year to date, the performance of the stock markets in Asia has been choppy to say the least. So the Asia ex-Japan index is down roughly about 5% year to date in US dollar terms, whereas China is down roughly about 20% in US dollar terms. And ASEAN is also down roughly about 2-3% in US dollar terms, whereas the developed markets, like for example, S&P is up roughly about 30%, Europe is up in the teens as well. So as you can imagine, the developed markets of US and Europe has done very, very well relative to the performance of the ASEAN as well as the Asian stock markets. I think there are key reasons for the underperformance are as follows. First of all is the negative impact of the whole COVID situation on Asia was actually much greater than the rest of the world, particularly if you compare to the developed markets. I think the main reason behind that is also because of the vaccination rates. So for the first half of 2021, I think Asia, for the large part of Asia, the vaccination rates were relatively low relative to the rest of the world. It's only from the second half of this year onwards did we see vaccination rates started to catch up in relation to the levels that we see in the developed markets. So as a result, I think movement restrictions have also subsequently been loosened up from the second half of this year. So that's reason number one. Second of all is the Chinese risk premium has rose dramatically over the course of this year. And that's due to a variety of regulatory as well as industry crackdown that has happened over the course of this year. And that has obviously seen the Chinese stock market derated over the course of this year. And last but not least, would be the difference in the fiscal and monetary stimulus that US has embarked on relative to Asia. So there was a huge difference in the regulatory and monetary stimulus. So as a result, there were a lot more liquidity flowing into the developed markets relative to Asia. I think these are the three main reasons why we think has led to the underperformance of Asia. However, in 2022, we believe that this negative impact will be negated to a large extent. So we are positive on the Asian equities for the following few reasons. One, I think the vaccination rates has finally caught up, right, relative to the rest of the world. Even if you compare that to the developed markets, right? So as a result of that, I think slowly but surely, the Asian countries and economies will start to gradually loosen over the course of 2022. And hopefully, within a few quarters or so, this movement restriction will be on par with the developed markets, hopefully by the first half of this year, if not, of next year, if not earlier, right? So I think in terms of the pace of opening, finally, Asia would have finally caught up with the rest of the world with the high level of vaccination rates. And thirdly is, I think China is stabilizing, right? So we have probably seen the worst of this regulatory as well as industry crackdown over the course of 2021. I think moving into 2022, we would see less and less of this news hitting the news wires. And I think on the back of that, I think the Chinese stock market will start to recover rather nicely, right? And the other point I want to highlight is also the convergence of fiscal and monetary policy in US and Asia would start to happen in 22. Like I mentioned earlier, there was a big divergence in the fiscal and monetary policy in 2021. But coming to 2022, we will start to see this fiscal and monetary starts to converge in 2022. And in fact, I also want to highlight that for the large part of the developed markets, I think tightening or tapering these are probably the buzzwords for 2022. But if you look at Asia and if you look at China in particular, they are starting to loosen. So they are essentially at the opposite end of the spectrum relative to the monetary and the fiscal policies that we see all over the world. And the last few points is also in terms of the chip valuations. I think the valuations in Asia, in China, is definitely very cheap relative to the US and to the rest of the world, right? So that will give us extra valuation buffer, right, in 2022. And last but not least, that it would also be the fact that there is relatively low weightings in Asia and China in the global portfolios, right? So global portfolio managers all over the world have been rather negative on Asia and in particular on China. Like I mentioned earlier, I think that actually essentially provides a good platform for better performance in 2022.
Yeah, I just want to focus more on China because what are your views on China? The Chinese stock markets have been challenging for 2021. Going into 2022, do you expect a reversal? I know you touched a little bit earlier on some of the outlook, but specifically the Chinese equities there. Do you expect a reversal in 2022?
So we are very positive on the Chinese stock market in 2022. I think there are a few key reasons why we think so. I think market participants in general have been worried about the US tapering and the inevitable interest rate hikes that's going to happen in the US and in other parts of the world as well. However, I think China is in fact on the opposite end of the spectrum. So instead of tapering and shrinking liquidity in the system, China is embarking on a monetary and fiscal expansionary exercise, albeit it will be a very modest one initially. Okay, so that's one. And the other thing that we are also very positive on China is like what I mentioned earlier, we are probably looking at the tail end of the internet regulations. I think at the very, very worst, I think we have probably seen the peak of the internet regulations and intervention that we saw in 2021, right? So in going forward, I think it will be a time for implementations of all the internet regulations that have been implemented over the course of 2021. And the other thing is also on the property sectors in China. So in 2021, and in fact, it started in all the way from 2016, we have seen Chinese government clamping down on the property sector. And in 2021, we saw all the negative impact on the likes of China Evergrande, Kaisa, and a whole slew of Chinese property company. So as a result of that, I think we are expecting the Chinese government and the regulators to dial back on some of these extremely tight property measures that we have seen, right? So they might loosen, for example, mortgage quota. They might loosen some developer loans quota, as well as make it easy for some of these Chinese property company to embark on M&A to consolidate the weaker players. So as a result, we feel that I think in terms of the property sector in China, we are probably not going to see such tight regulations and such strict restrictions that we saw in 2021. And the other thing I just want to highlight is also that in 2022, it will be a very, very significant political year. It will be the 20th Party Congress in 2022. And I think it will be significant because I think Xi Jinping will be confirmed for his third term. And I think all of us are well aware, typically in China, a two-term president is probably the norm. But I think Xi Jinping is probably going to be confirmed for the third term. I think that will definitely elevate him to the status of Deng Xiaoping and Mao Zedong, right? So we are also hopeful that in such a politically significant year, I think the policies that will be pushed out from the central government will be a lot more pro-growth. So I do think that there will be a shift to a more balanced mode between growth versus social responsibility initiatives that we have seen in the bulk of 2021. And the other thing is also that the policy easing measures that I've highlighted earlier is not just confined to one or two segments of the economy. I think it will pretty much be multifaceted. It will involve the monetary, it will involve fiscal, credit, property, and a whole slew of industry regulations as well. So this is definitely a big departure from the policy tightening scenarios that we have seen in 2021. So I think we are looking forward to this shift in this industry mindset that I think investors would have to adapt into in 2022. And we are also expecting a shift in the zero COVID policy that China and Hong Kong has been embracing in 2021, right? So I think with a large proportion of the Chinese population getting themselves vaccinated, as well, I guess, from a better understanding of the whole COVID virus, I think we are hoping that this zero COVID policy would be modified in 2022. And that will definitely add a much needed kicker to consumption as well as to industrial productivity, right? And the other few key points why we are very positive on China is that I think in terms of valuation, I think Chinese valuation is indeed very, very cheap relative to the rest of the world, right? So, and the other thing I just want to highlight is that the positioning of global fund managers have in China is also very, very light, right, compared to history, right? So once again, I think that does provide a very, very good springboard for better performance of the Chinese equity markets in 2022.
So for our viewers, if you have questions pertaining to the Chinese stock market, please leave your comments in the comment box. Our experts will get back to you as soon as they can. Jitun, what are your views on the common prosperity drive in China? You did mention that Xi Jinping will be elevated to Mao Zedong level or status. Do you feel that this is going to bring about some kind of different way of investing into China?
Okay, I think you are quite right. I think common prosperity is indeed a key tenet of Xi Jinping's philosophy. And I think keen China watchers might have noticed that the term common prosperity has become a key theme and a buzzword in China's policy documents and announcement by senior leaders in China. However, I just want to highlight that the common prosperity theme is not new in China. However, this increase in emphasis from the China's senior leadership does mark a turn from earlier years when the government actually encouraged some people in some region to get rich first. So in our view, this means that in China, there will be efforts undertaken to ensure a more equitable society with better welfare, even as the country becomes richer and more advanced. And also notably, under the banner of this China Common Prosperity theme, recent policies have targeted housing, education, and healthcare costs in China, which are obviously the main concerns of the common people in China. So these three categories of housing, education, and healthcare roughly accounts for about 45% of average household expenditure for an average Chinese family. So it is also important to note that China is not that different from other countries in that respect. I think the polarization between the rich and the poor has become a global problem, right? With this K-shaped recovery that has happened in the post-pandemic world, the income and the wealth gaps are increasingly pressing issues globally. So nationalism, protectionism, and movements such as Occupy Wall Street have all gained momentum over the course of the last few years. So the overall society trend in the US have also shifted from liberalism to social democracy. So extreme populism and anti-globalization movements are also on the rise all over the world. So I think common prosperity policies will, in fact, support wider employment and a more equitable income growth, and which should be positive for consumption in general. So within the consumption sectors, I think common prosperity policies will boost the consumption of consumer staples as well as more mass market discretionary goods, but may also limit the growth of the more high-end luxury item. And the other thing I also want to point out is that we don't think that the common prosperity campaign is a rob the rich but to feed the poor kind of approach, but rather it is a case of creating a more equitable and more harmonious society that will provide for a more sustainable growth trajectory for China.
I know you mentioned a little bit about the regulatory crackdowns. We were at the tail end of it, or perhaps we're going to be seeing less of the delta being seen in the regulatory crackdowns. But very quick one, what are your views on the regulatory crackdowns for China in 2021 vis-a-vis the kind of things that we're going to see in 2022? Do you see any risks of further regulatory crackdowns coming into China for this year?
Okay, and I guess that's very true. I think the recent mounting uncertainties on the regulatory front are definitely leading to significant volatility in the Chinese stock market. So in general, the recent slew of regulatory changes aim to address regulatory loopholes to ensure fair competition and sustainable growth. So our view is that these regulatory rules in China are no different from the antitrust investigations and the consumer data protection efforts that are also being undertaken in US and Europe. For example, I think Facebook was fined 5 billion penalty in 2019 by the FTC, or the Federal Trade Commission in the US, for violating consumer privacy. And Google was fined close to $9 billion over the last few years on antitrust concern. So the point I want to make is that I think China is not alone on that front, and we have seen the huge fines that they have levied on Alibaba as well as on Meituan, right? So, but in terms of the policy direction, I think China is not alone there, and is definitely similar to the directions that other countries and other regions are pushing forward over the course of the next few years. But the main difference is that China, the timeline for action is very much accelerated and compressed, right? In line with the centrally planned economy of China relative to the more democratic as well as the more open regulatory framework that the other regions enjoy. So what is happening now, our view is that the gray areas in terms of rules and regulations that have historically been used to tolerate regulatory inconsistency, right, are now being removed or clarified in no uncertain terms, right? So I think these changes will no doubt affect the existing business model of Chinese companies. However, our view is that these changes are overall positive and will eventually have happened anyway. It was just an issue of sooner or later. And these changes, right, our take is that they will level the playing field and clarify on rules, and should not be interpreted as some form of government crackdown on private companies. I think the importance of private companies on the Chinese economies have been well proven by China's developmental path over the last 3 to 4 decades. And I think that should remain the case going forward. So we believe that trying to understand the long-term goals of the regulators is key to the interpretation of these recent regulatory changes. So we are of the view that, like I mentioned earlier, we are at the tail end. If not, we are past the peak of this regulatory crackdown in China. I think the bulk of these new regulations and framework have already been announced, and with better clarity, right? I think these Chinese internet giants are now well positioned to grow, and more importantly, grow sustainably within the confines of clear rules and regulations.
What are some of the key themes that you're investing in China in 2022?
Okay, some of the key themes that we are investing in China would include structural themes that we think will do well for the foreseeable future. And these will include themes like renewable energy. I think the whole world is embarking on this sustainable exercise, a sustainability exercise. And I think climate change is definitely key to this whole thesis. And more importantly, I think Xi Jinping and China has made it very clear that they want to be carbon neutral by 2060, and they will be at the peak of their carbon usage by 2030. So these are broad and very, very sustainable themes that we can definitely play in. So definitely the renewable energy sector, like for example, investments into the solar sector, the wind sector, the hydro sector, the nuclear energy sectors are definitely very exciting sectors that we can look into. And the other thing is also related to that would be the electric vehicle or the EV sector. So right now, right, 50% of all EV vehicles that are manufactured or produced in the world, 50% of these vehicles are actually produced in China. Okay, our view is that more and more traditional car makers will jump on the EV bandwagon. So right now, I think all of us are all very familiar with the Teslas of the world, or some of us here who are keen China investors would be familiar with the Chinese OEM EV makers. But our view is, I think the EV bandwagon will include not just this EV specific brand names, but will also include the more traditional car makers over the course of the next few years. And that definitely makes for a more interesting and more exciting sector for us to invest in, right? So, and like what I mentioned earlier, I think China is definitely at the forefront of this electric vehicle revolution, right? And the other thing I also want to highlight is that in terms of the electric vehicle supply chain, I think China is also at the forefront of that. There are a lot of leading Chinese EV suppliers that are supplying parts not just to the Chinese car makers, but also to global car makers as well, right? So, and for us, rather than just buying into the OEM car makers and trying to discern which of these OEM car makers will be successful in the EV space, we think that the EV supply chain makes for a more reasonable and more sensible investment strategy. I think no matter which car makers win, right, some of these key EV supply chain players that we are investing in are actually well poised to capture market share, no matter who wins in terms of the OEM car makers. And also, like what I mentioned earlier, China does indeed have a very, very robust global EV supply chain that are based out from China. And last but not least, I think we will also want to highlight that the self-reliance and self-sufficiency theme will play quite well over the course of the next few years. I think the US policies over the course of the last few years has made it very clear that we are going to have a Western or Anglo-American supply chain versus a Sino or centric or China-centric supply chain. And a lot of these Chinese technology players are actually well poised and well positioned to take advantage of this structural shift in this technology supply chain that will going to happen over the course of the next few years. So I think these are some of the key themes that we are investing in China in 2022.
Okay, now let's take a step back away from China and look at other countries and other areas that you are positive on for 2022. Now, before you start answering that, just a quick reminder for our viewers. Again, if you have any questions, please leave the message at the comment box. Our experts will try our best to reach out to you as soon as possible. Of course, Jitun, let's go outside of China and see where else is exciting for you.
Okay, we are also very positive on ASEAN. So if you look at the share price performance of ASEAN countries, I think ASEAN countries have suffered over the course of the last 18 months or so since COVID-19 hit. I think going forward, I think a lot of this negative influences that we have seen post COVID-19 will start to reverse themselves over the course of the next few months. And I think we are positive on ASEAN, firstly, on the fact that I think in terms of the higher vaccination rates that we have seen over the course of 2021, like what I mentioned earlier, the vaccination rates of a lot of ASEAN countries have also caught up, or if not even surpassed, the national vaccination rates of other developed countries. So, and as a result of that, I think we can look forward to ASEAN countries reopening. And I think for the bulk of 2021, there have been quite a fair bit of start and stops in terms of the reopening of the economies in ASEAN. I think for 2022, we are hoping that this reopening will be more sustained. And as a result, I think the economies and the industry will be able to recover to pre-COVID highs. And also related to that, I think a lot of ASEAN countries are also very dependent on the tourism dollars. So with higher vaccination rates, with VTLs, with reopening that we are seeing all over the world, I think the tourism sector would be in a good position to benefit from all of that. And a lot of these tourism stocks that we are looking at are indeed trading at very, very reasonable valuations. And I do think that they are well positioned for recovery in 2022. And as a result of all of that, I think there will be definitely be better business, consumer, and investor sentiments across the board in the countries in ASEAN. So I think, like I mentioned earlier, the fact that ASEAN stocks, share markets have suffered over the course of 2020 and 2021. I think for 2022, I think they are in a pretty good position. And the other thing I also want to highlight is that I think the internet sector is also starting to shine in ASEAN and in fact playing catch up to North Asia. So if you talk about internet companies in Asia now, I think the Chinese internet companies, if not the Koreans internet companies, will come to mind. But our view is that over the course of the next few quarters or so, we will be starting to see more and more of these ASEAN-based internet giants starting to come to the market. So I think this plays very, very nicely into the rise of the middle class for ASEAN. I think for the longest time, I think investors have been pinning their hopes on the rise of the middle class in ASEAN, but realistically speaking, it's actually very difficult to find stocks that will benefit as a result of that. So with these new internet IPOs that will come up or has actually been listed over the course of 2021 as well as going to 2022, I think that makes for a very interesting new sector that ASEAN actually never had before, right? So I think it's something that I'm personally very excited about. And the other thing is also we will see the implementation of the Regional Comprehensive Economic Partnership or RCEP from the 1st of January 2022. I think this will definitely also benefit ASEAN countries, right? So I think that is definitely structural. We will start to see different ASEAN countries, especially if they are more export oriented, they will benefit from better integration of the different countries under this new economic partnership. So we were starting to see impact from the early parts of 2022. And like what I mentioned earlier, we do think that this is going to be a multi-year impact. So that's something that we are pretty excited about as well. And last but not least, it's the same thing like what I mentioned earlier. I think the valuations in ASEAN is indeed very, very cheap. And also in terms of the ultra-light positioning by investors, right? So we know that Asian has been an underweight and China has been an underweight amongst the global investors. But for ASEAN, right, it's even more underweight. I think that has, in fact, ASEAN has fallen off the radar screen of a lot of investors over the course of the last few years. So hopefully the key drivers that I've mentioned earlier would help to reverse that kind of investment thinking. So as such, I think we are pretty positive on ASEAN in 2022.
And then finally, what particular sectors within Asia that you like? Again, that you mentioned some, but I'm looking for some positives, maybe the finance sector, maybe manufacturing, maybe materials, any sectors in particular?
Sure. I think we are positive on quite a few sectors within Asia, in light of the global macro environment. And the first thing that we like is actually the financial and the banking sector. I think, like I mentioned earlier, globally, we are probably looking at tapering in the US, as well as interest rate hikes happening over the course of 2022. I think banks and the financial sectors are definitely interest rate hikes beneficiary. So they tend to do quite well on the back of that. And also, more importantly, like I mentioned earlier, the resumption of economic activity as a result of reopening will benefit the overall economy of all these different countries. So as a result, I think bank would also tend to do quite well in this kind of scenario. And last but not least, would be the write back of all the provisions and all the credit costs that were taken over during the last few years during the COVID crisis. And in a lot of these cases, I think the different economies in Asia have done quite well. So I think we would see banks and all these financial companies start to write back a lot of these provisions that they have taken over the course of the last few years. And the other sector that I think I'm very positive on will be on the material sectors. I think the material sector would be a good way as a form of inflation hedge. I think investors all over the world are quite wary about the inflation numbers that are being printed right now. So I do think that the material sector would tend to do quite well in this kind of environment. And also fundamentally, right, if you look at the material sector, there have been a lack of investments during the last few years. Okay, during the whole COVID crisis, I think investors have been reluctant to actually invest in the material sector. So as a result, we are seeing demand coming back during this whole post-COVID recovery. So I think from a fundamental aspect, I think in terms of the demand and the supply of the material sector, I think we are in a good position. And also, I also like to highlight that with the recent concerns that investors have in terms of ESG, that has also curtailed large investments in the material sectors, because as we are well aware, the material sectors tends to be quite pollutive. So as a result, we have seen investments being curtailed over the course of the last few years as well. So I think that once again, right, make the supply a lot tighter. And like what I mentioned earlier, demand is slowly starting to creep back as the whole world starts to open up. Okay, so last but not least, I think we are also positive on the auto sector. Like I mentioned earlier, I think we are starting to see electric vehicle becoming more and more mainstream. I think we will start to see more models of electric vehicle coming from not just the electric vehicles OEM, but also from the more traditional car makers over the course of the next few years. And also, the other thing is also related to the chip shortage situation that we have seen over the course of the last few quarters. I think the auto sectors have been suffering as a result of that. But our view is that we will probably see relief from this chip shortage situation over the course of 2022. So as a result, I think the auto sector should benefit on the back of that as well.
Okay, thank you, Jitun. Now, if you like to find out more on 2022 Asian market outlook, follow our page, and we at RHB will be happy to assist you. You can also comment below if you have any further questions, and we will try our best to get some of our market analysts to answer them. Stay tuned for the next session of RHB Money Chat. Until then, stay safe and see you again soon.